Hello everyone and welcome back to Sudden Wealth. I hope everything is well. Don't forget, drop that like and subscribe. As you guys know, it's the only thing that I ask. So, came back from holiday yesterday evening. I was wonderful holiday. I can tell you where I was. I was in Dubai. It was my first time there. I was very impressed with the city, particularly the amount of options, the peacefulness of it, the safety of it, but also how cheap it is. Like, I had this impression that Dubai was very, very expensive. But that's only, I mean, I think what must happen is people must go like to the middle of the city in the biggest hotel, right? And then they must Google best restaurants Dubai or something. And then they end up spending, I don't know, $100 or $200 a night or a meal because they don't know where to go. I mean, if you look at, I paid, what was it? Sorry for the Americans, they don't have gallons, they only have liters. But for my European followers, they will understand. I think in euro, it was like 58 cents a liter. It's crazy, right? I mean, a kilo of Australian beef was 11 euros. And I'm talking like Angus, entrecote, really premium meat. I'm not talking like garbage, garbage meat. 2.7 kilos of Norwegian salmon for 24 euros, or let's say 26, $27. I mean, that's way cheaper than the US and Europe. That's really my feeling is, and even if you go for like more normal restaurants, you can eat very well for like equivalent of $16, $17. But of course, yes, I also gone to the Gordon Ramsay restaurant. Yeah, then you pay 200 plus euros or 250 plus euros, $300. Yeah, easy, of course. But other than that, no. So that was the biggest surprise. And of course, I like warm temperatures. So people complain a lot about the weather in terms of being too hot. For me, it's fine. But also it depends a little bit on the person, of course. I struggled a little bit more in Mexico, for example, where the humidity was not really that warm. I think it was like maybe 26, 27 degrees Celsius, But it felt like it was 45. I mean, it was something really, felt like 110 Fahrenheit or something. So it's really, really much, much bigger. In any case, I'm back. That's what matters. Let's go straight to the meat. So we had the Moody's downgrade a while ago from the US debt, which was the final rating agency to downgrade it. We had a big sell-off that day. That is very likely a very good capitulation moment for bonds. That means probably we've seen the top of the yields, at least for the US ones. There's a very good chance of it. I'm not making that call, but I think, you have a big downtrend. You have everybody looking at it as being the source of the next big crisis and crashes. And then you have a downgrade by one of the rating agencies that leads to a big sell-off. Now, it was a big sell-off because I think bonds sold off something like 2%. Now, 2% in bonds is like 8%, 10% in Bitcoin. So just for you to have an idea. With maybe even more, maybe towards the 12, 14% drop in Bitcoin. So it is a big deal. And we may have seen the worst. I'm not saying we're going to go straight up in terms of bond prices, meaning yields coming down. But I think there's a very good chance that may have been the bottom for bonds and the top for yields. Don't forget, they trade inversely, right? Look, there's one thing we all need to understand. And I think a lot of people talk about this, but they don't take the time to explain to everyone what it means. If you leave bonds alone, or if you leave rates, yields alone, their tendency, their natural behavior is to go up. Meaning yields go up, bond prices come down. Why is that? because we live in a debt-based system. Now, what does that mean? You've heard this many times before. Debt-based system. What does that mean? That means there's nothing backing the currency you use. So the only difference between, let's say, a dollar bill and a monopoly bill is trust. That's it. And the only difference between dollar, euro, Swiss franc, Japanese yen versus Argentinian peso, etc., is that those currencies, the first ones, depreciate about 4 times slower than the Argentinian peso. But they both head to the same destination, which is zero, or very close to it. If you look at a chart of the dollar 100 years ago and now, it's a chart with only red candles. And it's the best currency we have. Maybe the Swiss franc is better, but it's not big enough to be relevant. And a debt-based system means the following. I go to a bank, let's call it JP Morgan, and I deposit $1,000. Now, that means I'm a creditor to the bank. That means the bank owes me $1,000. So in the balance sheet of the bank, when you look at the financial statements, it will pop up. You have the assets and the liabilities. It will pop up on the liabilities, and it's an asset to me. I have the right for that money that I've deposited with said financial institution. So what does the bank do? Do they lend your money out? This is the misconception that exists. No, your money actually never moves. What they do is they go to the Federal Reserve and say, hey guys, I have $1,000 in this deposit over here. Give me $10,000, which is 10 to 1, the deposit. Give me, create $10,000 so I can go and lend it out and make a lot of money. Now, that's called the fractional reserve system. 10 to 1, 3 to 1, 5 to 1, doesn't matter. Nowadays, we are pretty much at 10 to 1, and there's talks about removing the 10 limitation, meaning you can actually go eventually 100 to 1 if you want. So the question is, why do we have a fractional reserve system? Why don't we just have 1-to-1 reserves? Right? Meaning you deposit $1,000, the bank takes that $1,000, maybe buys treasuries, right? And they get the yield. And they have to wait, and let's say after a year, so they first focus only on getting deposits. They buy an instrument that pays yield, like treasuries, like equivalent to the deposit, let's say. And then they collect the yield, and they only lend out the yield from the treasuries. And at any moment in time, if all of us go to the bank, all of us can get the money back because it's 1-to-1 instead of 10 to 1. Why don't we do that? Well, because that way you grow slower. The banks have less ability to make money faster. And who does the Federal Reserve, the ECB, the BOJ, the Bank of England, the Bank of Canada, the Bank of Australia, who do they represent? The banks. It's in the name. So they exist first and foremost to protect the banks and the financial system. It's not to protect you and me. It's not. There's a reason why it's not called the European Community Bank or the European People's Bank. It's called European Central Bank. That's it. So it's not there to make things better for me and you. So that's what it means by a debt-based system. What triggers the creation of currency, and that said currency is then lent out to corporates across the economy, is multiplying by 10, creating money out of nowhere based on a loan. In this case, we are the lenders. We deposit the money. We are loaning money to the bank. The bank manages to get 10 to 1 in our deposit and go lend it out and make a lot of money. It's a bit simplistic, but in theory, that's what's happening. So why does yields always tend to go up? Because there's an incentive to create more and more debt. And the only way for the debt to remain attractive is if yields go up. Because if you're increasing the supply of something, you need to raise the yields to convince people and institutions to hold them. Or you pass regulation that forces them to hold it. Things like you must have heard, like Basel IV, for example, which kind of works a little bit to that. The idea is if there's really a lack of bond buyers, there's going to be some regulation that forces pension funds, insurance companies, whatever, to buy those bonds to make sure that yields remain subdued and we can keep on this game. Now, what happens is rich people understand the game, so they buy assets. That's it. Because your currency keeps getting devalued, because what is debt? Debt is future currency. That's it. That's all it is. So that means more dollars in the future, more euros, more Japanese yen, whatever. So wealthy people understand, and they focus on having assets to generate passive income. And because usually when you have debt, you don't pay taxes, or you have tax deductions and all of this kind of stuff, unless you go to a place like Dubai and you have 0% tax almost on everything, and then that way is much easier. Or the Cayman Islands, where you actually have 0% tax on literally everything, and then you don't have to be concerned about having debt to protect for taxes and stuff like that. But that's what you get. So that's why yields are always going up. If you let it go freely, that's actually what ends up happening. Now, we all saw that, shifting gears a little bit here to Trump, we all saw that a court has banned or has declared the tariffs illegal and ordered Trump and his administration to stop it. And when I read it, I said, oh, wow, that's actually quite funny. But I didn't understand why the big fuss. Basically, everything that Trump has done has been slowed in courts. And then it gets overturned later. So it seems to me that it's very highly unlikely that if this goes to the Supreme Court, that this will fly. And the reason is not even to do with Trump. Forget Trump, take him out of the equation. It's the principle. You really don't want 3 judges that you have no idea where they came from. Nobody voted for them. And they have the power to stop massive agendas of administration A, B, C, D, and E. Because you get to a point where elections become irrelevant. Because you don't even have to vote anymore. Because what's going to happen is this. Any political party that is in power is going to propose something. And then somebody is going to sue the administration for it. And then they're going to pick certain courts where they know the decision will be favorable. And then you block everything all the time. And basically you end up being run literally by federal judges. Most of them, you have no idea who they are. Most of them are activists at the moment. And you really risk, basically, the presidency for any party, meaning nothing. Now, I know the argument of the other side. Oh, but are you telling me that we should have one single person make all these massive decisions by him or herself? No. My point is this. When the tariffs came out in April 2nd, your time, or the time to go to court on this is, or to start filing lawsuits, is not in May, it's April 3rd, the day after. That's when you go after it. You don't go after it after a month and a half of the tariffs being in place with negotiations ongoing. This is terrible. You had your time. And by the way, there's also other mechanisms where the tariffs can be kept in place. There's some trade laws from the 1977 and all of this kind of stuff that can allow the tariffs to continue. My point is, if you think that a decision is completely outrageous from the standpoint of a single person being able to do it, sue it the day after. Or at least sue it before April 9, which was 1 week after, before the implementation was announced April 2nd, but the actual implementation was April 9th. You do it around that time frame. You don't do it a month and a half later. is just stupid. You open a precedent which is very dangerous for the future. So, and by the way, if you don't like it, maybe next time don't give so much power to the president, because the president used to have much less power. A lot of more of it was used to be in Congress, but this was given. It has nothing to do with Republicans and Democrats. This was given by both sides over time to the president, and now you get what you get, right? I mean, it is very simple. Now, so we have to wait and see. I would be very surprised if it doesn't get overruled, potentially even in the Court of Appeals. But if it doesn't, probably will go to the Supreme Court, and I would be very surprised if that would fly in the Supreme Court. But, anything is possible, I guess. When it comes to crypto, Bitcoin is strongly still above 106k. Ethereum has shown some strength, as well as some of the meme coins here in the channel have put up some quite nice recoveries, and we're now in this consolidation phase, a little bit of corrective phase, if you want to call that. There's literally no euphoria in the market, which is good. That's what you want to see. When you see euphoria, that means it's too late, or you're drawing dangerously close to the end of the cycle. So we are nowhere near there. And I wanted to flag something, because if you guys recall, I made that prediction a while ago about Ren Nuna from Crypto Banter. So the guy said Ethereum was a dead chain. There was no point in holding it. He couldn't see any point of it, and he was selling the little ETH he had left. He was going to get rid of it. That day was the day before Ethereum started its pump. So today he makes a video talking about how Ethereum looks strong and ideas on how to build an ETH-based portfolio. Now, I said, when he made that video saying that Ethereum was dead and all of it, I said Ethereum's going to pump, and it's going to pump way stronger than these people think. And I can tell you that this guy who's telling you this right now, he's going to go do a complete 180, basically have no accountability on what he said. He's just going to completely shift gears to what is popular without giving any context. Like, for example, I said that I thought Ethereum is going to hit 5,000 by December 2024, January 2025. We got to 4,200. Obviously, we didn't get to 5,000. I said I was wrong about Ethereum, and Ethereum has been one of the things that I've been most wrong in this cycle, in terms of it's much weaker than I expected. Okay? But I come and I say it. I don't just jump. Let's say I was bullish about Ethereum, and then Ethereum, behaves like a terrible coin. I'm like, oh yeah, Ethereum is finished. If you just drop it, it's going to zero, short it. Like, I'm not going to do that and basically give you no context about what I used to say and just drop you that, and that's it. But I told you, the day that he made that prediction, the day that he said Ethereum is a dead chain, there's no pointing in holding ETH, I'm selling all my ETH. I said he's gonna make a U-turn on Ethereum without any context, and we just build on the popularity of Ethereum again, because he doesn't give a shit about his followers at all. He will say anything to get members, ad revenue, whatever. He will say anything, and you can bet that if Ethereum keeps on going like this, he will somehow pretend that he was always in favor of Ethereum. He's been with Ethereum since the beginning, whatever. He's going to come up with something like that. It's very obvious to me, because this is how he operates. So what I'm trying to say, I'm not picking on him in particular. It was just such an easy one. The reason why I'm saying this is, as we progress in the cycle, you're going to see more and more of this by other people as well. And you're going to start to see a lot of people deleting videos and comments and all of that, and just keeping the winners. Be mindful of what they're trying to do. They are trying to leverage the bull market to gain your attention. You're going to go to their channels. Oh my God, this guy is a genius. Look, he's just right. I mean, this guy is a massive. Let me give him $5,000 for this mastermind, whatever. And what they're trying to do is to create the funding for the bear market. And their funding is you. That's what they're trying to do. So realize what I mean, it's up to you. If you want to go and pay $5,000 for a mastermind course, God bless you. Best of luck. I hope you pick nothing but 100 Xers and you do very, very well. But be mindful that this is the strategy behind it. Okay? I actually wouldn't be surprised if, for example, Crypto Banter has deleted his Ethereum video saying I don't know if he did or not, by the way. I didn't check. But I wouldn't be surprised that he eventually deletes it if he hasn't done it yet. Where he said that it was a dead chain, it's finished. There's no point in holding it. It's done. There's nothing to see here. Go away. I wouldn't be surprised at all. Because this is the crypto world. This is always like, the people that pretend to be the most saint are usually, you get bad surprises. Let's leave it there. I just wanted to flag that to you. So I think we're gonna keep on moving higher. I don't think the top is in or anything like that. But but we need some pullbacks. We need some breathing places. We need some consolidations. We cannot just go up and up and up. Because when we get there, when we get to the up and up and up and up and up phase, that's the end, usually. And then a lot of things will go up, scams included, everything will go up. And then everything will go down one day. And you're going to think, it's just another sell-off. And then you're going to find out a few months later, actually, this was the top. That's my feeling. That's just my opinion. Who am I to? I'm just a guy with a mask on YouTube. Maybe I'm completely wrong. Who knows? Let's wait and see for it. Now, just to finalize it, there seems to be a good correlation about something I wanted to flag. I think Somi covers this very well, so I advise you to check it with him. Bitcoin seems to move with the global M2, right? Everybody knows. But Ethereum and altcoins seem to move a little bit more with the business cycle. And the key factor is ISM manufacturing. When it's below 50, it's contracting. I've talked about this many times, but just one again. When it's below 50, economy is contracting. When it's above 50, it's expanding. And for you to have an idea, I think during the GFC, we had maybe 18 months or 16 months below 50. And now we have like 28 months below 50, then 2 months slightly above, and now 2 months below 50. So basically in the last 32 months or something, we had 30 months below 50. Now we had this flash PMI that came out that usually lags a little bit the ISM, and it was at 52. So remember, by 50 good, below 50 bad. And the expectation was like 49. So it was a big beat, let's say. So next week, ISM, the manufacturing PMI will come out. It will be important to see. I think it's June 2nd, if I'm not mistaken. It's going to be important to see it. I think the expectations is like 48, 49. Let's see if that flash PMI will be right and we will be maybe 50.3, 50.4. I don't know. Let's see what happens. We had a little bit of spike of inflation in Trueflation, but we're talking 2.04% for the US. So what are we really talking about here, right? It's way lower than people expect. So still very curious to see what's going to happen over the next few weeks. And with that, thank you very much. Very good to be back. Don't forget, like and subscribe, and I'll catch you in the next one.